trade I'm about to show you is right out of my playbook. If you've seen some of my other videos, you've seen this before. This is a trade that happened today, and I wanted to give you something tangible, again, that you could take action on. Welcome back, my funded futures traders. My name is Forrest. I invest in stuff. I think that everybody should too, and I'm a day trader. In this video, we're going to review one of my playbook setups, which is a high volume doji off of a node back into the POC. I call this a mean reversion trade. Now, what is the mean? The mean is an average. Now, this isn't technically the average. This is one of the many different types of averages that exist in the market. In particular, we're looking at the point of control, which is a statistical data point inside of a volume profile. So I just said a lot of acronyms, threw those at you. We're going to review each component, but feel free to check out my other videos, which break down the volume profile as well as these trades in general. This is going to be a breakdown of a real trade that I took today. If you're looking for a trading home, you can check out my Discord, Trade Edge. If you're here on this channel right now and for some reason you aren't already a member of the MyFundedFutures Discord, you're crazy. Make sure you tune in there for all of our promos. I do giveaways specifically with the MyFundedFutures community. I'll say that again. I do giveaways. I give away accounts, guys. I give away accounts. And the only way that you're going to get access to those giveaways is if you're in the MyFundedFutures Discord. So if you like free stuff and trading information, make sure that you subscribe to this channel and join that Discord. Let's stop wasting time with video intros and take a look at this trade. So first and foremost, we're looking at M&Q. What's on our screen? Up top, we have volume, right? I put my volume up on the top of the screen. Why? Well, I just like having it up there. This is the session. Okay, it's currently Thursday. What is today? October 17th. Okay, it's Thursday, October 17th. I'm using TradingView on my iPad here. A little bit different flavor. I kind of like the tactile approach to the whole candlesticks. It feels good to trade like this, guys. I highly recommend it. Integrated with your broker and everything else, like usual. If you haven't used TradingView before, check it out. Now, what's on my screen? On the left, we can see this horizontal bar chart, and on the right, we can see this horizontal bar chart. So these are two different volume profiles. Let's break them down. One is the visible range volume profile, right? So let's go ahead and get rid of that one on the right. And we're just going to focus on the session volume profile here. Now, this is going to start developing a new one because we just finished. But in general, we can see that the volume profile for today ended up being like this, what we call a D-shape volume profile, an even distribution. If you take in statistics or are familiar, this is just a standard distribution. Okay, it is normally distributed. Is it perfectly normally distributed? No. You can see here that your P99, the tail ends of the distributions are not flat. So it's not completely statistically accurate, but in general, we can see that there is a nice little shape to it. Why does that matter? Well, in general, the volume profile can tell us where there is bias within a session. So it matters quite a bit in terms of just understanding what is possible within a session, right? So let's delete some of these lines, get rid of that. We don't need that anymore, as well as this little red dot that I just created. Get that out of there. Okay, how can we figure out where the market's going to go based off of the volume profile? Well, we can utilize our horizontal volume along with vertical volume. So what we're going to do is we're going to go back in time. We're going to take a little field trip, hit bar replay here, and we're going to do bar replay back to this moment in time here. All right, so it looks like I went back to 11 a.m. Okay, this is the volume profile at this moment in time. We have the prior day point of control. Points of control are these red lines. The point of control, quick little refresher for anybody who's not familiar. If you're new to this, the point of control is the place or the price where the most transactions have taken place within the volume profile. Why does that matter? Why is it so important? Well, the market is an auction, and participation, or where people have participated, tells us where they are. It tells us where people might get greedy, or more specifically, where they're trapped or are feeling pain. Okay, so the POC tells us where most people decided to show up and play the game that is trading today, or really just participating in the market today. Cool. So what I want to do is step forward a little bit. And to do that, I am going to hit this little arrow here. Gives me one more candlestick, right? And what I'm looking for is a signal to come back into the point of control. Now, at this point, we hit this purple line on the top. That's called the value area high. I talked about that normal distribution, right? So if you think about the middle of that distribution, right, one standard deviation is 68% and something that is normally distributed. If you don't know that, that's fine. Just take my word for it. Go look it up. Actually, don't take my word for it. Look everything that I'm saying up, okay? Trust but verify in general, okay? don't believe me. I could also misspeak. I might not catch it. My editor might not catch it. So even if it sounds nice, go check it. Trust but verify. Anyways, the VAH and the VAL are the boundaries of our one standard deviation, where 68% of all the volume takes place. Outside of the middle of this distribution, again, okay, outside of the middle of this is the rest of the percentages, right? The other 32%, okay? It's on both sides of that. Now, why does that matter? As we get farther away from it on either end, we are extending away from where people are playing the game. Why does that matter? If the market is an auction, okay, and we want to have some bias about what might happen in the future, it would make sense that we expect price to come back to where people are participating. Here's a very simple example without spending 30 minutes on it. If I want to sell something to 3 people, my price to sell it is $1,000, and the average of all of their prices that they're willing to buy is 500. One guy's at 400, one person's at 500, and one lady is at 600. The average is 500. You think they're going to meet me at 1,000, or am I going to meet them? I'm going to come to them. It's an auction, right? We're pushing and pulling, but in this case, there's more buyers than the one seller. I'm going to come to them, okay? Whatever it is, that's a made up example, but the market's going to go to these magnets. Now, these magnets exist all over the place, right? So this is not the singular component. I just want you to keep this idea in mind, okay? There are magnets all over the place. So let's continue to step forward in the auction. And you'll notice here that we came up to this little node here, okay? So see if I can get a price line here. It's actually not going to give me a line. Here we go. So there's this node here on the volume profile, right at 20,510. And if we look at price, okay, you see that the volume up here, if we look at the volume chart up here, there's a spike in volume. So we came up to this node in the volume profile. There was more participation there, and we created a higher volume doji red candle. So we rejected this price area. This is a signal candle. So if you've watched any of my videos on mean reversions, this is a classic signal. It's a short. Where do we short to? Okay, safe exit on these trades that I always say is the point of control. Point of control is down here at 450, right? The closing of the candle is at 494. It gives you a 44-point trade. Not massive. Now, what's important about these trades though is that these are major signals in the market, okay? The A setup for these is after sweeping. So if we would have got a signal candle after sweeping this high, that would have been better. Not likely today if you just looked at the daily candle for the session. Not going to jump up to the daily, but it was very unlikely that we were going to sweep the high in this case, just with the way that the action played with overnight and everything else, right? So rejecting this node really was the end of this rotation, probable end of the rotation. I'm using hindsight now, but in the moment it made sense. Okay, high volume signal coming out of a node here gives me a short, but these signal candles in general are good to hold across the range, right? So the first impulse did get us down to the POC. Okay, so let's see where we get in the next few candles, right? So there's our POC hit, and you can see that it bounced off of it inside of that 15-minute candle. But if we keep playing this, if you were really, really patient, okay, you'll see that we eventually went a little bit lower. Look at that. Okay, so that liquidity grab was the high of the rotation at that moment of the day. And if you would have went from that close all the way down, that was from 490, let's just call it 490, down to the VAL, which is where I wouldn't have held lower, down to VAL. 390 is like 100 points. So a nice 100 points of opportunity there. Looking at the rest of the session, were there any other very clear high volume candles? Not necessarily that were signal candles, right? There were candles with high volume at the ends of the ranges, and we had a really good day inside of the Discord here, just, you know, trades that we talked about and called out. But this is an actual playbook trade. It is a type of mean reversion. It's not an A setup, right? It's not a perfect one because we didn't sweep the edge of the market, but we did hit a node, which is important, right? Points of control, nodes are really just nodes. It's a high volume node, right? Just like there's low value areas, low volume areas, there are high value areas, high volume areas, and a point of control is just a statistical data point inside of a particular node that we care about, which in this case is the session point of control. So look for these. Look for signal candles, right? Top wicking, something that is wicking into the range, right? So we had a top wick here, signaling that we are exhausted on this side at the end of the range, at a node here, okay? We draw the node for you at this node here, right? And we could take profits. At the time, the point of control was lower, but we can see that it did give us this move across the range, which is very typical for these trades, right? Because it's doing a liquidity grab, high volume rejection of that price area, which means the next target would be the other side of the node, which in this case, if we look at where our node is, right, the actual structure of the node is that we just went across the entire shelf of participation. It makes sense. We traded across where people are, and that's what we're always going to do. So I hope you found this video useful. Try this out for yourself. Go and back test this. It's super easy. Actually, just scroll left and find similar trades. You will see these pop up all over the place, right? Look for these signal candles at the end of your price action, specifically around VAL, VAH, and the sweeps. Check out my videos on mean reversion trades in general. There's much more in depth. I have videos on the volume profile as well, much more in depth. This is taking all of those pieces together. This video would be an hour long if I had to break down every single component, and I'm not going to do that. So do your homework. I'm here to help as a resource. That's why I do these videos. I'm passionate about this. I love doing this. Otherwise, I would just trade, but I love helping people. So don't be afraid to reach out to me, either on Discord, Instagram, wherever you can find me. I'll get back to you. The best place to reach me is on Discord though. All right. That's where I live as a trader, or leave a comment on YouTube. I appreciate all of you that support me and all of the things that I do. And I will see you in the next video. Peace.